How's it going, everyone? It's Sam. Grayscale is freaking out right now. They are having a really tough time over the last few days, and they're kind of capitulating. They're trying to manipulate people into staying, and it's quite interesting. I want to talk about that. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Now, I will leave a link to Margex underneath the video in case you want to trade cryptocurrency on leverage. Like in a bull market, this is typically the best time to trade on leverage because you can make a lot of money. Now, of course, we're going to experience pullbacks, so be ready for this. That's why I kind of like doing short-term, more leverage positions that have stop losses. And then in addition to that, I do longer-term low leverage plays as well, which can be really good. Those are the ones that really pay off a lot long-term. Like I have several that are up still hundreds and hundreds of percent that I opened a while ago, and it's easier to write out the volatility with those longer positions. Now, I'll explain a really bad situation that happened with leverage to someone else, just how you don't want to play leverage later in the video. But again, you can check out the link to Margex underneath the video. There's also a link to CoinW as well in case you want to trade there. They have futures and they have spot trading. We know Grayscale had a massive day yesterday, massive day of selling. $600 million plus leaving their ETF, the largest single day outflow from an ETF in 15 years. Today they had another massive selling day, negative $444 million on 319. Grayscale lost another 6,800 Bitcoin today, which is about 2% of their BTC. These are massive outflows. I mean, they lost $1 billion, over $1 billion in the last day. And that's $15 million annually. $15 million annually in fees that they just lost. Now, the ETF, I think, was set up this way with these high fees because they had a massive amount of Bitcoin, right? They had, at the time, I think it was around the high $20 billion range of Bitcoin in terms of AUM. And it's around a similar point today, but they've lost a lot of Bitcoin. Basically, the price of Bitcoin has gone up. They've lost a lot of Bitcoin. So it's evened out to about the same amount of AUM, so they're getting the same amount of fees. But this is very short-term thinking from them. The reason is BlackRock is very close to surpassing Grayscale in terms of Bitcoin held. Now, BlackRock has a lot less in AUM, a lot less in fees because they charge 1/7 the fees, something like that. So they make less from their ETF at this point than Grayscale, but they can put it in other funds. And this is something I've talked about. Like they've come out and said that they're going to put it in their Strategic Investment Opportunities Fund or Strategic Income Fund, Global Allocation Fund. And those funds have like 0.8% fees. And when they put it in there, they get double the fees. So if Bitcoin grows, let's say Bitcoin goes and doubles, well, the amount of AUM that was put in those funds into the Bitcoin ETFs doubles as well. So then they get that 0.8% fee on all that new AUM. So it can be quite attractive where maybe they are going to make more even with those lower fees than Grayscale. And Grayscale thought too short term. They thought this was a cash cow. They can print money with this. People won't leave because they're stuck here. No, a lot of people have left. They've lost about 40%, I believe, of their Bitcoin since these were approved. And now they're trying to walk it back. They're trying to lower their fees. It's really interesting. Grayscale CEO came on TV today and said fees on their Bitcoin ETF will drop over time after outflows hit $12 billion. Grayscale CEO told CNBC on Monday that fees on their flagship Bitcoin ETF will come down over time, softening an earlier stance defending the costs above the market average. They said early on that they had been giving investors ways to access Bitcoin for so long that they were the most trusted product. I don't trust them because their parent company is in financial trouble. So I would much rather put my hard-earned dollars into a Bitcoin ETF from Fidelity or BlackRock than something like Grayscale. It's just safer, and the fees are 1/7 as large. There are some ETFs that have said that they don't have any fees for the next year. So they're capitulating. They're trying to manipulate you like, hey, I know that you have to pay us a lot today, but at some point in the future, we're going to lower the fees. So don't worry about selling right now. And they're just seeing massive outflow. So it's funny how short-term their approach was. Really shows you gotta look longer term in Bitcoin, even if you're someone that's supplying a product in Bitcoin. Like, don't just try to milk as much money out as possible. Take a long-term approach. Think about it, because if they had come with a 0.2% fee, I bet you they wouldn't have even had outflows. Sure, some people would have sold and gone into Bitcoin, ETFs like BlackRock and Fidelity, but there would have been some people actually putting money in GBTC too. They would have said, oh, well, Grayscale's already here. They've been around for years. I'll just put it there if their fees were competitive, but they're not. So people are moving somewhere else. So yeah, more money going into the strong hands of BlackRock and Fidelity. We don't have the inflows for BlackRock today, so it will probably be a net inflow day, but it's hard to tell at this point because we don't have those numbers from BlackRock or Fidelity. Now, we did get news that USDT is printing another $1 billion, which means basically people are putting money in USDT. They're looking for liquidity. They want to put it into other crypto projects. So when we see the Tether treasury printing more USDT, it's usually a good sign for things to come in the future. Now, this is a good reason that you should not be too overexposed to leverage. Like, I talk about leverage, but I think you need to use it responsibly. I talk about how it's a very small percentage of my portfolio. Whenever I update my Patreon on going on leverage, I say this is highly risky. I could lose all of it, but it's a calculated bet. And, I've done well with them so far. We've been in an up market. I've made way more money than just buying spot. But this is what you don't want to do. Some guy I know messaged me today saying they FOMO'd into MicroStrategy, Solana, and meme coins with his entire net worth plus leverage on Friday. Today he got partially liquidated and said he is very close to a total wipeout. He doesn't know how to tell his wife any advice. So that is why you dollar cost average. That's why you follow channels like this, because we try to keep you level-headed so you don't do stupid stuff like this. You don't go into to ape in your entire portfolio. Like, as I've said, I have a video literally on my home screen on the YouTube channel, like, should I buy Bitcoin or wait? And I basically say, if you don't have an allocation, just get to 1% and then figure out what you want to do after that. But just get to 1%, get the feeling of those ups and downs, make sure that you can handle the volatility, because if you come in too hard and heavy, you can do stuff like this and lose money very quickly. And again, I talk about leverage, but I don't think leverage is necessarily the problem. It's this FOMO mentality, right? Like, for example, you can use a shovel. You can use it to dig holes. You can use it to help plant trees in your yard. You can also use it to kill someone, right? So, same thing with a car. You can use it for good, or you can drive drunk and hit someone. So same thing with leverage, same thing with meme coins and investing into projects and MicroStrategy, even if you're buying options and stuff like that. Like, just be careful. Make sure that you take a long-term approach as well. That's the theme of this video. Take a long-term approach. Again, if you do want to try to use leverage, just try it with a little bit of your portfolio. Put in $100, $200, see if you like it. There is a link to Margex underneath the video. I appreciate it. I will see you.